Welcome to Investor XP. This is the news show that covers investing for gamers. Our message? We want gamers to become investors and secure their future. We believe that gamers like yourselves have strong, intelligent communities that allow the cultivation of ideas, and that gives you a distinct edge in the stock market. This show we discuss investment ideas focused around gaming, entertainment, and technology. I'm not a professional analyst, but I am retired under the age of 40 because of investing, and I want to help you build a better financial future. You can track my stock picks from the show on our website, investorxp.com. You can also see exactly what I'm investing in at kidbrokers.com. I'm building my kids' college fund with the very stocks we discuss on this show. Gamer fuel, Mountain Dew or Coca-Cola. A lot of people prefer drinking the Mountain Dew when they're raiding or playing video games. And I wanted to discuss, those type of stocks as an investment in our gamer portfolio, entertainment portfolio, or whatever you want to call it, that we're kind of putting together. And these are really good choices. You have consumable items, and gamers, like everyone else, have their preference of what they consume, and Mountain Dew is one of them, and the company that makes it is Pepsi. So we're going to take a look today at Pepsi's stock and Coke stock. I personally prefer Coca-Cola to Pepsi or Mountain Dew. I like playing Zelda or whatever with Coke and rye. I prefer mixing it with rye or just straight up. It's fine too, but Coke and rye in video games can't beat it. So let's take a look at Pepsi. Start with Pepsi if you prefer Mountain Dew. Pepsi's who makes it, and these are fairly attractive stocks. They're priced a little bit higher than the average on the S&P 500, 25 times earnings, but they pay a pretty decent dividend. You get a 2.7% yield on that, which again is much better than a bank is going to give you. Pepsi has done very well over the last year. All the time you can see it goes up and up and up and up. So it's got a very good track record. It's been doing well recently as they try and convert to more healthy alternatives. Apparently sugar kills people, and they're finding that out. So forward earnings is only 20 times, so that's not too bad. They are above their moving averages, the 50-day and 200-day, so they have some momentum. Let me highlight. I got to get out my highlighter here. Hold on. There we go. There's your moving averages. When the price of the stock is higher than those, you see the price is 112. That generally means it's got some momentum. So look for that. And here's their forward price to earnings, trailing price to earnings. Those are some of the things that we look at. And you can see cash to debt. They're another cash hoarding company. They've got some debt out there, so they're putting it to work, trying to grow. Book value per share, $7. That we might like to see higher, that ratio of how much the book value is compared to what their stock price is. But overall, Pepsi is a good choice. They're one of the beverage kings out there. They spend a lot of money on advertising to keep their name out there, to keep their market share. They're a good choice if you like Mountain Dew. If you want a fairly safe bet, a big company like that's a good one. Great track record. They're going to keep hold of the shelf space that they have, and it's one of those companies where when they advertise, it's not so much to say to get people to go out to buy it. It's a little bit like buying a car where they advertise to kind of make you feel good about your purchase, if that makes sense. A lot of their advertising is geared the same way. So I don't particularly care for Pepsi. It's a decent stock. You should feel fairly comfortable buying it, I would say. My preference is Coke. Now, Coke is been lagging a lot lately. Coke, they're down today, but if you look at their 1 year track record, they're down for the last year. Now, Max, very similar to Pepsi, where they've gone up and up and up. Now, they've had this little dip here, but they go up. They pay a little bit better, 3.5% dividend. People have been wondering, Coke has not made the transition as well as Pepsi. A lot of people are staying away from Coke right now. I look at it like a buying opportunity. So, if you look at a lot of the analysts, they are negative on Coke. I don't know. They have a good track record. Now, they are not showing momentum. Their 200-day and 50-day moving average. Oh, they are. They're a little bit above. Okay, I thought they had dipped below to bear territory. They're still technically above, but they've been slumping for a while. Forward earnings is 21, trailing is 28, so a little bit more expensive than Pepsi. They're down almost 7% over the last year. They are another one they've got a pile of cash that they're putting to work. So, book value per share, a little bit less than Pepsi. So, numbers-wise, they are a little less attractive than Pepsi, and they are in a slump. So, I like them better. I think it's a better brand. You might call me crazy. I know a lot of Mountain Dew fans out there. I think Coke's the better brand. I think this is a good buying opportunity. So if you want stocks that have a long history to them of bringing good returns and it's a pretty decent dividend, those yields. Coke and Pepsi, Pepsi's more attractive looking at the stats, and definitely from what the analysts are saying, they like Pepsi more recently. Long term, Coca-Cola is the way to go. I think Berkshire still has a sizable amount of Coke. People are trying to get more healthy, so they're moving away from these products, but I don't know. I think they'll always be there. It's strange. You see someone like Warren Buffett who drinks Coke all the time. I mean, he's like 600 years old, still drinks it and looks to be in fine health. But I don't know. We're moving to bottled water. Pepsi's making a better transition. They look more attractive, but I'm going with my gut. I'd like to drink Coke. I would bless buying Coke. We were actually looking to add it to the Kid Brokers portfolio until we started doing some research on Qualcomm. I'll probably add Coke next to diversify their portfolio. It's definitely on the buy list. Pepsi's okay too, though. Let me know what you think on any of the picks for today. We're talking about Coke or Pepsi. I like either one. I'm going to go with Coke. I think that's going to be a future buy for the kids' fund. It was going to be till Qualcomm bumped them up. We bought them. We like them. Barnes & Nobles as a speculative pick. Leave me a comment in the videos. The recap videos will be going up today for each story. Let me know what you think of the picks. Shoot us an email, mail@investorxp.com if you have any tips or questions, or you just want to send us a comment, or you can tweet us, InvestorXP. But chat with us live during the show. We're live 1:30 Eastern, 12:30 Central. That's it. Thanks for watching. Subscribe so you get the latest investor news for gamers. We'll see you tomorrow.